In markets, there are different types of environments that you can find yourself in. For example, you may be in a boom cycle, a Goldilocks cycle, stagflation, or recession. And in this video, I'm going to talk about each one of these and how to spot that you might be in that type of environment. And most importantly for active traders, which assets tend to do well or poorly in each cycle. So what we're looking at is a US economic heat map, and it's a new feature that we just recently added to our software, the Edge Finder. And for fun, we also added the UK, Europe, and Japan economic heat maps as well. So today I'm going to focus mostly on the US economic heat map as it is the most complete one that we've built. We do plan on continuing to add more of these features in the future. By the way, at any point, if you'd like to check out the tool that I'm referencing here, the Edge Finder, the link will be in the description down below, and there's a promo code YTVIP that you can use at checkout, which will get you a discount. Okay, so let's go back to this theory of which market environment are we in and how do we spot it? Well, let's talk about one by one each one of these cycles. A boom cycle is a mature point in a financial market where growth is very strong. And when I say growth, what I'm referring to is economic readings like the GDP growth of a country and PMIs and retail sales. And of course, jobs data as well kind of falls under that category of quote unquote growth. If lots of people are getting hired, this is more of a strong environment. And if less people are getting hired, we would call that a weaker environment. Now, when we talk about a boom environment, we are seeing growth metrics become predominantly very strong compared to analyst forecasts and on a nominal basis. And we're also seeing inflation sticky or high. Now, inflation can be up or down for multiple reasons, but some of the simple versions, and I do have a full video on inflation. If you would like to take advantage of that full video, we will pin it in the top right hand of the screen. If you want to better understand CPI, you could maybe open up that video, pause it, and come back to that once you finish this one. But if we see inflation high, it can either be a supply side inflation type or a demand side inflation. Now, let's just real quick give a high level view of those. A supply side inflation event might be something like COVID-19 or wars that break out that significantly reduce the supply chain throughout the world of particular goods, causing the existing supplies price to go up. That can be a supply side inflation event. A demand side of inflation is the the less threatening one, basically, where we have substantial demand and wage growth causing people to go out and buy goods and run the prices up. That's actually a better scenario, in my opinion, than a supply side inflation event, which can be very devastating because it's not something that the Fed can really control. Anyways, we'll come back to more of that in just a second, but a boom cycle is basically where inflation is rising and growth is also rising. This is a pretty benevolent overall decent spot to be in the markets. You might say, well, inflation rising, that's scary. Yes, as long as it's not going crazy, this environment can actually be very strong. And specifically, which markets would do very well in this one? Well, the answer is commodities. Commodities would do really well during this type of environment. Think about oil for a second. If we think about oil and demand of that underlying commodity, if economies are roaring and demanding, more and more raw materials, the price of oil should go up. And if prices in general rising, oil also should go up. The next section is Goldilocks. Now, Goldilocks is the stock market's prime spot, and crypto for that matter. Goldilocks is basically where inflation is cooling and not threatening at all, and growth is very, very strong. So if we have, for example, 2023 and 2024, we saw inflation starting to cool and the jobs market staying resiliently strong. During that period of time, you saw stocks rally very hard and crypto had a really monumental run. So this is the type of environment that we want to see for risk assets. So specifically, I'm thinking stocks and of course, cryptos. So during that time, that's what you're probably going to see do very well. Now, by the way, these first two segments, you might be wondering, how does gold do in these environments? And I would say gold is okay in a boom cycle. It benefits somewhat from the commodity rising stuff, but it's not really a necessary thing. When everything is looking good, people don't rush to gold. Remember that for when we get into the second half of this. During Goldilocks, gold, it's not particularly attractive because people are feeling very confident and they want to go out and invest in things that can give them higher yield, like stocks, which during this Goldilocks type of environment are likely rising. Next up, we can talk about stagflation, arguably one of the most dangerous of the list here. Stagflation is where growth growth is cooling off or even falling, and at the same time, inflation is sticky or even getting very hot. That type of environment is no fun for anybody. A lot of people are likely getting laid off during this time, and prices are rising at the same time. Not fun at all. Now, when this happens, stagflation oftentimes can actually spill into the next one where we see a recession, and I'll talk about that in just a second. But stagflation, what type of commodities or indices, what would do well in this type of environment? Well, stagflation would be very strong for gold. Gold really thrives in this type of environment because think about it. You might say, well, if inflation's going up, won't the Fed raise interest rates? Well, they would in this type of environment where they have growth to give back on. Basically, the Fed controls interest rates. And when I say give back on, what I'm talking about is if there's strong growth, the Fed can afford to stunt that growth slightly in order to get inflation down. But if there's no growth and growth is already hurting at the time that inflation starts to go crazy, the Fed's in trouble. They're in a corner because they can't hike rates too much to fight inflation because hiking rates would send the labor market into a horrible, downwards spiral. But at the same time, they can't do too much with inflation because, again, their hands are tied, if you will. Stagflation is a really tricky environment for economists to deal with and for the Federal Reserve to try and manage. It's actually a pretty nightmarish scenario. And there's only one that is arguably worse. This is the risk off. And by the way, let me just finish off on stagflation. Gold typically does really well in this type of environment. Stocks do not do well as layoffs and corporate earnings getting hurt by inflation and cooling growth. No fun at all. Now, finally, risk off completely here is recession. Recession is this idea that you're getting a slowdown in growth and a slowdown in prices. And I know right now that you're like, well, how would this be worse than stagflation? Because stagflation, no one likes prices going up. Many of us probably remember going to the grocery store in the last few years, which has been kind of painful when prices are rising rapidly, which they did so around the world. By the way, that was a supply side inflation issue with Russia and Ukraine and COVID-19. That was not something experienced only in the US, but rather all over the world. Inflation was really a problem for many places. So my point here, however, is that when you enter into a recession or a complete risk-off environment, growth goes even worse. It gets really bad. Layoffs accelerate. Company earnings tank. Things are looking really bad. People are not hiring. People are losing jobs. That's bad. But what it also ends up doing is when it gets bad enough, it actually starts to cause prices to fall, causing deflation. And at first you might say, hey, lower prices, that sounds pretty good. But usually you have to have this scenario happening first for this scenario to then play out, right? So when prices are going down rapidly, and you may celebrate that for a second, but you realize what happens is, why are prices going down? It's because people don't have income, and so demand for products goes absolutely out the window. And so, prices going down are great if you have a job in that scenario. In fact, actually, that's an environment where people who have cash on hand, this is the dollar, if you have cash available, this gives you a severe advantage because you have the ability to actually take advantage of falling prices. It's very, very rare in US history. There's not very many instances where you get this full-blown recession, maybe the Great Depression, 2008, and a handful of other times, 2015, briefly, you saw deflation. But these types of environments are incredibly painful. And while, obviously it sounds nice to have cash on hand, a lot of people find themselves in really tough times during that, because family is losing jobs and they're losing jobs and they're supporting. It's not a fun time. We don't want to be in this scenario. And again, the second people realize this, a lot of new traders or people in general think that, prices coming down would be a great thing. Well, it would if it didn't come with layoffs. So we have to juggle these things. So what does well in this environment? Gold does well because the Fed has to drastically try to print money to try and save the day, right? So the money printer absolutely goes crazy during this time, trying to save the day. Stocks do horribly during this time, and having cash in general is ideal in this scenario. And I'm not talking necessarily just about the US dollar. I'm talking about if you have cash available in your account, your bank account, and you can actually go out and buy assets. a recession type of environment is an absolute opportunity for those who are patient enough to wait for it. Now, recessions, again, are very rare, and let's all hope that we don't get a whole bunch of them in the future, but it is likely inevitable. Recession happens in any sort of business cycle. It's just part of the process. But just wanted to share that with you, and also wanted to go through this market heat map tool that we've recently been building. This helps you to spot the type of environment that you're in. At the end of the day, we want to keep our eye on growth and inflation. Inflation metrics are going to be your CPI, core CPI, PPI, and core PCE. Then your growth metrics are going to be all of these: GDP, manufacturing and services PMIs, retail sales numbers, and then jobs data. And we track all of this data for you. It's automatically updating within your portal if you have a copy of the Edge Finder, and it makes it very easy to spot what type of environment that you might currently be in when looking at the forecasted values that are put up by analysts versus actual values that are coming in. Again, all of this is automatically brought into your software copy if you have the Edge Finder, and if you already do have the Edge Finder, I encourage you to spend some time looking at the economic heat maps that we've built. And if you do not, and you would like to get a copy, there's two things you can do. You can use the link and promo code in the description down below, or if you have questions, or you'd like to do a call with one of our support team members, or you'd like to just know some more information about the tool, please speak with us on our website, a1trading.com, in the live chat feature, or using the first link in the description down below. We'd be happy to assist you and give you some more information about how the tool functions. Thank you very much for watching.
I hope that video was helpful to you, and I also wanted to make sure to share our Telegram channel with you. Every day we are posting up chart markups and analysis and in-depth breakdowns of what's going on both fundamentally and technically in the markets. We also drop bonus videos in the Telegram channel, so don't miss out. Come join our Telegram channel. The link is in the description down below. Have a great rest of your day.